Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the opening action, the trade setup, as well as the market strategies you need to follow for the day. Now, we'll start off with a wrap-up of yesterday. Indian markets gained for the fourth straight session yesterday. In fact, we also, for the second time in this week, crossed over 25,000 mark on an intraday level, but failed to hold on to that on the closing end. We closed at 103 points higher in trade at 24,980. And of course, it was the broader markets that continued to outperform, and the GST cut-led news flow that continued to lift the sentiments in various consumption-oriented sectors like autos and FMCG, consumer durables as well. Now, as far as the trade overnight is concerned and the cues we are getting from global markets, the US equity market settled lower, dragged by a broader decline in technology stocks. S&P 500 fell by about 0.6% in trade. Nasdaq was down by 1.5% nearly, and the Dow Jones average also settled almost flat in yesterday's trading session. Now, this morning, Asian markets also opened mostly lower in trade, mirroring the losses of Wall Street from the previous session. This decline has come in as investors are addressing Japan's latest trade figures and are still awaiting China's decision on its loan prime rate as well. Right now, if you see the Hang Seng, Nikkei, Kospi, all of them are down in trade, with just slight gains coming in on the Chinese index. The GIFT Nifty is also indicating to a mild negative start in trading session again in trades today. So there could be a mild opening for the Indian equity markets, but we'll see how this really pans out in trades. There are a lot of global and local news flows that are going to be important for us to address with our top market experts. Let's welcome on board our guest now for the day. We have Mr. Gaurang Shah, Senior Vice President at Geojit Investments, now joining in to share with us his views on the markets. Warm welcome and good morning to you, Gaurang, and thank you so much for taking the time out. Well, first up, on the sentiment level on the markets, I just wanted to take a quick view. From what we were looking at over the last previous 5-6 odd weeks, has sentiment completely, turned for the better? Have we, possibly be able to say that, a bottom is in place? And can we say that the markets are poised to move higher from here now?
Thank you so much, Sakshi, for having me on this show. Good morning to all the viewers of BTTV and to you and your entire team. Well, to say that we are completely out of the woods, I don't think that's going to be the case because we still need clarity. Clarity in terms of the delegation that was supposed to come from US
Yes.
on 25th. Clarity in terms of the additional 25% tariff on 27th of August, which the President of United States of America has spoken about. But I think a lot has happened in terms of improving the sentiments, if you ask me, compared to what we were last week beginning. Of course, then we had clarity in terms of our sovereign rating getting upgraded from BBB minus to BBB stable. Clarity in terms of the Alaska meet between the two presidents, President Putin and President Trump. Though after 3 hours of meet, nothing conclusive has happened. But there seems to be, and of course, then after, yesterday we had that meeting of Trump, European Union and President Zelensky of Ukraine. So I think a lot, and of course, the most important trigger is, Sakshi, as we all know, the big announcement from Red Fort on Independence Day by the Honorable Prime Minister of a new avatar of GST in form of 2.0. We'll know the clarity, but I think there are a lot of assumptions being made on the street in terms of what sectors, what companies could benefit it. I think we'll have to wait for clarity. From where we were last week to where we are closer to 29,000, 24,950, 25,000. I think that's a good recovery. 25,000 happens to be a very strong resistance level on the higher side. We tried to go there yesterday. We crossed over on Friday, on Monday also, but somehow we were unable to sustain above that. So I think give it some time. We need to give market some time. Crossover is definitely going to happen, but we need a little bit of more clarity in terms of tariff and what the Trump administration is thinking about. And then, of course, clarity in terms of the new avatar of GST. This should improve the sentiments as we go forward into the future. But my sense is 24,800 on the lower side now is the floor as a support. and 25,000, 25,000, 25 remains to be a resistance. So we'll trade in that zone, but stock specific moves, they will definitely be there.
Okay, fantastic. You gave us an overview of which are the areas to really look at, where could we see the triggers flowing in from. Talking again about the global order, the world order seems to be changing quite a bit over the last few weeks. We've been seeing a lot of talks happening, something that was completely at bay. Look at what's happening with the trilateral talks between US. Ukraine and Russia. We are again awaiting to see whether there could be any signs of a complete end to the war, which has been prolonging for 3-4 years now, and over that as well. What could that do to the overall global economy at large as well? And of course, like you pointed out, the tussle that India and US are facing consistently on the tariff front. Again, we are hearing a lot of statements coming in from US Treasury Secretary, Scott Bessent, who's consistently talking about that India has been imposed with sanctions only because we have been profiteering with buying of our Russian oil, which we have only increased, amidst this war-based conditions. There are other statements that are coming in which continue to say that, Donald Trump is leaving no stone unturned to continue to ensure that the world knows that he was brokering the peace between India and Pakistan. So there's so much geopolitically that's happening that we really need to understand, what does that end user should really take in from all of these, statements.
Well, to answer your multiple questions, actually, I think I can only give one sentence answer is keep your ears shut to the external noise pollution. I think that'll be a very simple approach, isn't it, Sakshi? Because, okay, one more good thing has happened that we had the foreign minister of China coming in, meeting with
Yes.
Mr. Foreign Minister. He met with NSA, he met with the Honorable Prime Minister yesterday. And there is a lot of progress over there between India and China in terms of ironing out certain issues. And I think I'll thank Mr. Trump for this, honestly, because it is because of his tactics and antics that India and China has actually come on the negotiation and a dialogue table, which was much necessary for both the countries. And three important crucial factors which India had a concern with respect to supplies from China are being sorted out. So first you had only President Trump speaking about India being responsible for the blood that has been on the street of Ukraine, because it seems that our purchases of crude oil is actually drawing the blood. What happens to the purchases of US? What happens to the purchases of European Union? It's very easy to close your eyes for what you do and keep your eyes wide open as far as what the others are doing. So I think this is just a pressure tactic, Sakshi. Honestly, it has been in media all over the place that this gentleman called Mr. Donald Trump has been doing all these stunts primarily to pressure Russia to come to the negotiating table and possibly, draw some signs of peace in Ukraine. And what we are hearing about yesterday's meet between President Trump, Ukraine, and the European Union, I think that says it aloud. There is no negotiation that is left for the President Zelensky of Ukraine to talk about. He's been just told to take it or leave it. That's what I'm reading. I hope it is true. God knows what it is. And secondly, I think, Sakshi, you go on talking about something on and on, on and on, then that loses its importance and it loses the impact. So I think let Trump and his sidekicks do what they have to do. I think we have to get our head down and think what right we can do to improve and come out of this situation and possibly have a better trade partnership with our neighbors. So I think that should possibly improve. And my sense is, and what I am reading, Sakshi, and of course you would have also read, that the reforms that the government is planning to do in form of new avatar of GST 2.0
Yeah.
could offset the negative impact of tariffs to a great extent. So let's wait and watch.
Fantastic. Markets have started to tick, albeit on a lower end. You can look at a 92 point of a drop on the Nifty in the pre-open trading session at 24,891. So we'll see how it pans out in trade, going forward from here. But very importantly that you marked out, Mr. Shah, and that's on the improving dynamics between India and China. China, as of yesterday, has informed that they're lifting the export ban on critical rare earth minerals and metals to India, and also on fertilizers as well. We did see some buoyancy in some of these sectors even yesterday. How big an improvement is this going to be? Does it offer an opportunity to take a fresh entry into these spaces, EV related spaces for rare earth metals and minerals, and within the fertilizer space as well?
Oh, definitely, yes, Sakshi. And my sense is that it gives a lot of clarity because a lot of sectors were dependent on this rare earth minerals and magnets, especially the autos, the EMS, and of course, the to a certain extent, defense sector. Uh, it's not that we were not prepared to look at the third country when this issue started to crop up in terms of supply side artificial constraints that were put into place by China. But it's good to see that Wang Li has actually listened to the counterparts over here in India. He has met with the Honorable Prime Minister. Honorable Prime Minister Mr. Modi has also spoken about positive outcomes of the meeting. And I have always believed that, defense, autos, EMS segment, we spoke about PNG Electroplast, it went to 480 and then yesterday I think it was up about 8 or 10%, correct me if I'm wrong. Continue to remain positive over there. And my sense is the entire auto pack, especially the EV segment of the auto pack, would possibly breathe a sign of relief with this kind of a development that we've seen between India and China. And of course, defense will also, of course, yesterday defense was a little bit down and out, but I think it was one off. We still remain positive on these sectors.
Okay. We have a lot to talk about these specific spaces, autos and defense alike. So, for autos, one side we are looking at this EV related space getting the benefit of lifting of those restrictions from China. And the other part that you mentioned, GST cuts, that's something that has been keeping autos in the driving seat from last 2 days in the markets as well. Across the board, we've seen substantial moves, be it the four-wheelers, commercial makers, or even the two-wheeler makers as well. Do you think autos are going to be significantly benefited vis-a-vis other sectors when it comes to GST? Is that going to be the top most benefited sector?
Well, honestly, not only in the driving seat, Sakshi, I think they are in overdrive mode, isn't it? Since the time they have, Prime Minister has announced this GST new Avatar 2.0 on Friday, we got back to work on Monday morning, and since Monday yesterday, and I hope even today,
Yeah.
most of these stocks have given you some smart returns in a very short period of time. So autos will, and of course, a little bit of more clarity on the tariff front will throw, I think, a two-edged positive move for the entire auto pack, be it ICE engines, be it EVs, or be it the futuristic green hydrogen driven engines that will come into effect as the progress is made at ground level. So yes, I mean two wheelers. I mean still, but honestly, Sakshi, I think since the run up is there, wait for a small correction. I'll first of all let me give a disclosure. I forgot about that. So all recommendations that I'll be sharing with you this morning on your show, Sakshi, is a part of our fundamental team recommendation. Our company, Geojit or I, do not have any personal investments in any of these stocks that are going to be recommended, nor we have any financial interest. There is no conflict of interest either, but we share recommendations to our clients on similar lines. They might hold their long-term positions in the recommendations that we'll be giving this morning. So coming back to answer your questions, I think we'll have to just, I won't get totally carried away. Of course, the markets have given a fantastic run to the auto sector from Monday and yesterday. Uh, Given the run up, if you have investment in two-wheeler, three-wheeler, four-wheeler, commercial vehicles, EV manufacturing companies, you can continue to hold on. But my sense is that we'll have to wait for a little bit of clarity because I was speaking to my sources, and since Monday, the sense that I'm getting, Sakshi, is that these GST cuts, as and when they come into effect, is primarily going to be at an entry level segment, keeping in mind a certain capacity of CC of the engine and the length of the vehicle, be it two wheeler, three wheeler, or four wheeler. So don't get too much carried away. But yes, there is tailwind positive. And I think that tailwind positive will come into a thrust once we have clarity on the tariff front also. So the sector looks promising, yes.
The sector looks promising. We also have Nomura's report coming in on autos after GST rate cut has been, something that we are looking at as the biggest anticipated event now in the next couple of months. Nomura says GST rate cut could lead to more upside, highest upside potential. They've marked out for M&M, Ashok Leyland and for TVS Motors within the suppliers. Their preference is for domestic companies Uno Minda, Samvardhan Motherson and Sansera as well. Now, they also believe that for small cars, just like how Gaurang has mentioned, the benefit could be higher because we could be seeing a reduction from 28% to 18%, and therefore the kind of price cuts that we could expect is to the tune of 7 to 9 odd percent is what is being mentioned there. Although when we see higher than 350cc motorbikes, they could be actually on the receiving end because there the GST rate could actually increase to 40%. So that's something one has to continue to just watch out for. Of course, all the clarity will come in once the final GOM meeting is done and GST Council finally reiterates what are the final rates and what do we expect going forward from here. Okay, let me also just talk to you about the defense names that you were talking about, Gaurang. Why they're in focus again today is like, Cochin Shipyard, one of the stocks that we've been discussing for last 1.5 to 2 years, has been your favorite space and you have consistently thrown your weight behind this stock. There's focus again because the company's management has issued an upbeat guidance now on its earnings call. The company is saying that the management expects top line to grow between 14 and 15% during the current fiscal year. More importantly, it is guided for its revenue to double by 2030 and 2031. So that's the positive statement coming in from the company's end. 1715 is the current level at which we are seeing Cochin at as well. We also have a UBS report. I'll mark out that in the same breath and then you can give us an overview on the defense stocks. On HAL, UBS has come out with a neutral rating with a target price of 4900. It believes the government has cleared the 62,000 odd crore rupees of an order for 97 Tejas Mk1A jets, and that's going to be a part of the UBS's 1.24 lakh crore rupees FY26 order. Deliveries are yet to begin, but this is the company's second Mk1A order, taking the total Mk1A orders to 180 now. You can actually see in the pre-open the stock is reacting positively to 3.3% higher. Your sense overall, Gaurang, top stocks that one should continue to accumulate?
Well, still remain positive, and I think I'll remain positive for a pretty long period of time, Sakshi, on the entire defense bank,
Yeah.
purely because of the conviction and confidence that we have in this particular sector. So you were talking about Tejas, Tejas Mark 1, Tejas Mark 2, that is Tejas MK2 Sakshi, is going to be a mini stealth bomber. It'll have some wonderful
Okay.
capacities of carrying some amazing missiles, air to air, air to surface, air to sea, under its wing. And those missiles are going to be, let me tell you, very, very destructive. There are advanced talks with the RDO and those companies which are into manufacturing of these defense arsenal, if I can say that, to enable loading them onto Tejas MK2, which the Hindustan Aeronautics Limited is currently manufacturing. It will take a while. It's not. These are all complex high technology projects. So my simple answer to your question will be that stay invested in the defense sector for a long period of time, and then just close your eyes and see the magic unfold.
Absolutely. All right. Let me just quickly go back to the market to see how they have settled in the pre-open trade, and we'll continue our conversation with Gaurang. The markets on the Nifty front, you could see a slight downtick when we open. 0.06% of a mild downtick is expected. 24,965 is where the Nifty is settled in the pre-open trade. Autos again could be higher, although jumping in about 0.25% higher. Broader markets that picked up pace yesterday could also be in the winning zone. You could also see some infra realty, consumer durables and pharma kind of names that could also be opening higher. We're also looking at pharma names that were so far subdued, names like Sun Pharma could be in focus back again. From FMCG, names like Nestle could be in focus today. From telecom basket that moved up yesterday, there could be some more moves that are being expected in the pre-open trade, like Bharti Airtel, Coal India. These are the kind of stocks that could be also opening on a higher side as well. And of course, the auto ancillary names that continue to be in focus yet again. So that's something that we are looking at as well. Another very important, update that we actually got yesterday, and that's going to be the key focus in the markets today also, and our conversation throughout the day, is about the cabinet clearing the new online gaming bill that's likely to be tabled in the parliament also today. Now, yesterday we did see names like Delta Corp swing back into action, 8-9% kind of moves could be seen on that one. But what we are now given to understand is that as far as the online gaming sector is concerned, especially those companies that are linked to money making or promoting advertisements of making money in online gaming, those could be at the receiving end as well, because this bill, as per the sources which have told Business Today television, is that this bill could actually seek to prohibit all money based online games, irrespective of whether they involve skill or chance. And the bill now proposes a ban on offering and advertising such games, and disallows also banks and financial institutions from processing any related transactions as well. Just to take an overview from you, Gaurang, as to what could this really mean. Industry is already starting to talk about their reactions are coming in. They seek an intervention from the government because they believe this could probably sound death knell for the buzzing online gaming industry in India. What would you say?
I think it was need of the hour, to be very honest, Sakshi. Uh, Most of the time, people who even endorse these things, they don't know about it and they just endorse it because of the sake of that money that they get. I mean, use common sense, bro. I mean, come on. You people look up to these celebrities, and when these celebrities end up doing these kind of things, and the companies that they endorse give their endorsement, they go, kaput. Uh, who's at the receiving end? It is not the individual who's endorsing it. It is not the company who's promoting it. It is the individuals who are using these kind of platforms. And we've read enough of such instances, Sakshi, in the past and at current times. And most of these companies who give out or putting out these platforms for use are misusing the laws. So I think it was a time good enough for the government to, wake up and smell the coffee and punish or take appropriate steps in terms of policies, banning, prohibiting any such particular product or platform which is involving direct cash transfer in whatever name be it, whether it is skill enhancement or whether it is trying your luck out. Finally, you are, sucking money out of a very common person who does not know much about it, and he or she just gets involved into your platform because they look upon those so-called celebrities. And we've heard it, I think, about a week or 10 days back. Certain celebrities were asked to appear in front of the legal authority to explain about certain platforms going kaput. So I think it was time right enough, and I think more such steps needs to be taken to stop any kind of misuse or loopholes in the law.
Absolutely. The sector that seems to be valued at around 2 lakh crore rupees has already reached out to the government. We do hear that the All India Gaming Federation has stressed the need for progressive regulation rather than outright prohibition, highlighting the potential fallout for millions of players and broader industry as well. They have written to Amit Shah, Home Minister, to really seek some intervention on the online gaming bill as for now. And what we are also given to understand in the communication that they have done, the Federation has stressed the need for highlighting a potential fallout that could actually affect, millions of people who are involved in this, and probably just sound the end of the online gaming industry. But what this could do is to also seek to protect the end consumer. That's what the intention of the government is, at least at this point in time. What does one do with the stocks here, Gaurang? With, say, Delta Corp, do you think it will benefit because it's largely in the offline space?
Well, I think it's very difficult to give a call on that whether who will benefit, and I can definitely say companies like Nazara Tech would be at the receiving end because they are more into these gaming platforms. Correct me if I'm wrong, Sakshi.
Yeah, yeah.
Yeah, obvious they are into offline, so possibly they would be one of the companies which would possibly feel lesser amount of these whip that has been put out by the government. But I won't go into any specific company since we don't cover this sector, Sakshi. So, and my humble request to viewers is that there are better sectors. Look at defense, look at cap goods engineering, look at FMCG, look at cement. I mean, look at power. There are a lot of sectors. I mean, don't go into sectors where there is lack of clarity in terms of policies from the government side. You may end up burning your hand or your finger or yourself completely. So I would possibly give it a pass.
Okay, both Nazara and Delta, at least for now, are down by over 5% in the opening of the trade. Let me just first up talk about the indices. You can look at the Nifty just like on the back foot. You can see 24,952, 27 points lower in trade. You can also look at the Nifty Bank, for instance. That's also slightly lower in trade right now. What is buzzing in this market is broader markets, small caps about 1/4% higher. Infra, IT, consumer durables, metals and auto are those sectors that are seeing some mild gains at this point in time. But sectors like banks, financial services, real estate and pharma and even FMCG, they are now starting on the back foot. Top movers on the Nifty, you have Bharti Airtel, 1.7% higher, HDFC Life, NTPC, Eternal and Infosys among the top movers. Whereas on the downside, you have Kotak Mahindra Bank, Shriram Finance, Ultratech Cement, HCL Tech and Tata Motors still declining by about 0.5% odd in trade. What's buzzing? Clearly, what Gaurang has said, keep an eye out on defense. HAL is the top mover in the F&O space, now up by 2.5%. What also comes in forward is GAIL from the oil and gas space, Blue Star from the consumer durable space. That's also in the buzzing zone, at least for now as well. 2.5% higher for HAL. That's the top mover. What else is buzzing in the Nifty 500 names? Is there any stock? Yes, Ola Electric Mobility, 6.9% higher. Remember, this is the second day in a row when we've seen a substantial move on Ola Electric, which has so far been a big laggard of a stock. But the big relief coming in from rare earth metals is likely to benefit all those companies that are into EV space. And that is what is pulling up the stock higher since yesterday. Another 7% of a move. The stock is now at 48 odd levels. What else is buzzing in the Nifty 500 names? You can see PPAP Automotives, that's also higher in trade right now. HLE Glasscoat, that's another one that's also moving higher in trade. So some such names that are Lumex Industries, Lumex Auto, those are also actually moving up. But we'll just wait it out to see how the market settle. But Ola Electric for you, Gaurang, what do you see here?
Well, I don't see any kind of silver lining, to be very honest. It is still long way from the IPO price, 76.
Yes.
Correct me if I'm wrong, Sakshi. Uh, and it is very sad the kind of news that is coming out in the public domain as far as the company and the company's management is concerned. And there is huge competition. I was reading a report yesterday itself. One gentleman put the Ola scooter on fire because he was waiting for 8 months for a replacement battery. And here the management is talking about upgrading their service centers and increasing to some 3 to 4 times. Bro, at least take care of whatever service centers and complaints that you have. If I'm not mistaken, Competition Commission of India, there is a record-breaking complaints against this particular company. So, I mean, and they launched one particular motorcycle. They were going to launch electric motorcycle. I don't know how it's going to happen. They have not reported authenticity in terms of the numbers of registrations that they put out and what the Vahan, that is the government site, has. Along with that, there are a lot of issues, Sakshi. And I get scared even when a Ola scooter passes by me because that product looks so fragile and so delicate to me that even if you just push that particular, the person will fall off. So I won't say that this is a company, and of course we don't have coverage on Ola Electric. That's one of the reasons why I don't want to comment on buy, sell and hold. I think there are better, stronger listed entities which are also into EVs and ICE engines that you can look at. I mean, I just compare Monday, Tuesday, what TVS Motors, Hero Motocorp, Bajaj Auto has done, and just look at what Ola Electric has done. If you are purely comparing two-wheeler EV manufacturing companies, so I think established players, well-established players, are better to look at from a long-term investment idea, Sakshi.
Fair point. Let me just quickly also welcome Kiran Jani, Head of Technical Research at Jainam Broking, to share with us his technical view on the markets here. Good morning to you, Kiran. Good to have you with us. Well, 4 days of a rally, 2 days of a strong move on the markets, and today we are seeing slightly muted trade on Wednesday in the middle of the week. How are you looking at the market? Do you see this is going to be another opportunity to start accumulating? And then therefore we make a consolidated base at around 24,950 odd levels, and we move forward from here, or is it going to dwindle down some more?
Very good morning, everyone. So overall, after a long weekend, on weekend we have seen some positive news for the domestic market and Nifty, Bank Nifty, or global or across the market. It has opened with a gap, and now it is sustaining above gap number one. We have seen on Monday gap up opening, but again second half we have seen the all most of the gain is erode from the high. However, yesterday there is a follow-up buying. So now for the Nifty, 24,800 is the very strong support. Any dips towards 24,800 to 850 would be the buy zone. For intraday perspective, of course, we have to keep an eye on 24,900. If it is not breaking down, then you can expect some sort of recovery. Now across the market, because of the GST news, there are FMCG, there are auto stocks where we are looking some good amount of rally already been there, and there is still scope of coming. So we have two different sector where we are looking market can rally because of the GST news. There is the auto and FMCG. Apart from that, we can also consider the global headwinds, and considering that three more sector which we are liking, and there are chances if market recover, those sector will contribute. So another is the metal sector and the contraband on the IT. So these three four sector where we are looking the today or maybe in upcoming time, you can take the opportunity when the market is going down. Now coming to the bank nifty or banking sector particularly, within the banking sector, we are liking PSU bank most. Now, if we are considering the bank nifty chart, the 55,500, 55,400 is the cluster support for the intraday. If prices is not going below 55,400, then we can expect recovery also. So buy on dip would be the strategy with the strict stop loss of 5,500 for 55,400 for bank nifty. And within the bank nifty, we are liking nifty PSU bank like SBI. So at current market price, one can go long on SBI also. So you can keep an eye on PSU banks, auto, IT, and metal, where we can see some good amount of rally should come today.
Okay, got that. Coming back to Gaurang then. Gaurang, one more sector that I wanted your view on is textiles. Now, we've been seeing how the kind of impact that we've been seeing on this entire space over the last few odd weeks. There has been some respite on the domestic front with the removal of 11% import duty on raw cotton until September 30th, which the textile industry has said that it's a welcome move. Yesterday, most of the stocks were also higher in trade, but they still believe that Indian cotton prices remain costlier than global prices even now at this point in time as well. Now, on the one hand, there is this tariff overhang. Even if the government is trying to protect the domestic industries that will be negatively impacted, already 25% tariff has already been put, and you also pointed out in your initial comment that everybody is looking at what will happen on August 27 and whether there will be any kind of a breakthrough before that, or have we lost that opportunity at least before that. How would you look at the textile space as of now?
27th also happens to be a Ganesh Chaturthi day. I hope Lord Ganesha put some common sense on that gentleman who's sitting in United States of America on the presidency chair. But yeah, this was a lighter note, of course, actually. But I think the cut on cotton is a welcome move, but this is not enough. 11% cut is just not enough. I think if you want to be competitive, keeping in mind that you have to take all adversities into consideration and the competitiveness and the edge from countries like Vietnam and Bangladesh when it comes to exports of textiles to US from countries like India, Vietnam, Bangladesh, etc. So government needs to do a little bit more. And honestly, Sakshi, I think we were a country which were flourishing as far as this textile industry was concerned a couple of decades back. But it was thanks to the ignorance of the earlier government and a lethargic policy that we lost out on that edge. This government is trying to revive this industry, and it is more important so because it has a lot of employment related comfort zone also. It brings down the unemployment to a great extent because this is one sector, textile sector, that has a lot of opportunity for employment for a lot of people, and that is unskilled employment. You don't need much of skill at a lower level. So a good this cut has been put in of 11% on cotton, but a lot more needs to be done.
A lot more needs to be done. All right. Let me just also ask you, Gaurang, before we have to let you go, any newer IPOs or the primary market space, newer entrants that you have looked at of late? We had Bluestone yesterday. A lot of them opened up yesterday. At least 4 IPOs opened up yesterday, and we have more opening in today as well. Patel Retail, Vikram Solar, Gem Aromatics. We had 3G Shipping Global, and I think today we also have Mangal Electrical. Regal is going to be listed today. Anything from these newer entrants?
So these are purely from a long-term point of view, Sakshi. I'm not in a position, nor am I capable to answer in terms of listing gains. But yes, yesterday our research team has put out an IPO note on Vikram Solar Limited.
Okay.
There is a feeling on the street that the price band is a little bit higher and a little bit rich in terms of valuation, but we have given a subscribe recommendation from a long-term point of view for this Vikram Solar Limited IPO.
Okay, fair point. All right, Gaurang. We'll thank you then on that note for being with us on the program and sharing with us all your insights. As always, it's always good to speak to you.
Always a pleasure, Sakshi. Thank you so much for having me on the show.
Thank you so much. So we'll just get back to the markets, and with Kiran we will discuss the technicals now, viewers. 24,942, about 38 points of a decline right now. Most of the sectors have actually slipped. It's IT that's now trying to take over the reins from auto space, at least at this point in time. Although consumer durables, just mild uptick can be seen, and infra just about bias on a positive side. But rest of the sectors have all come under mild pressure in the markets today. IT sector is showing us some positive moves, 0.4% higher. What do you make of this, Kiran, on the IT pack?
So within the IT, we are liking Infosys. If you look at since opening, Infosys is trying to pull up the market also, and it is also trading above last 5 days high. Now we can see on Friday it has given a very good rally. Sorry, on Thursday, the particular price band is 1470. If price is sustaining above 1470, then definitely Infosys can do some magic. But at current market price also looks very much promising. You can go long. When we started this show, Infosys trading somewhere around 1450. Now it is 1460, already 10, 11 rupees gain we have seen. You can still go on long on at current market price or any dip for the intraday perspective. Keep a strict stop loss below 1440, and you can expect price target somewhere around 1500 for sure within 2-3 days. So in IT, Infosys look very much promising. On metal sector, I also would like to re-rate or discuss about the Vedanta. Yesterday also Vedanta outperformed the market. Today it is trading above is yesterday's high, giving a fresh breakout of falling trend line and ascending triangle pattern on intraday. The 450 is the current market price. You can go long on Vedanta for the target of 470 and with the strict stop loss of 440. So IT and metals, they are trying to pull up the market, and I believe we can stick to the IT and metal for 1 or 2 weeks.
Okay, got that. Let me just quickly also point out a few more stocks. PG Electroplast is now the top mover in the FNO space. It's out of the FNO band there, 3.5% higher. That's the one that is on the move. Kiranji, how would you look at this one? We have seen that this stock in the past week did show us 35% of a decline in just 2 trading sessions. Thereafter, there has been some stability and the stock is now inching slightly higher in trade. What would your top choice be here?
See, if you look at the PG Electroplast stock price or a chart pattern on daily price chart, it has started its bull run somewhere around from 200 rupees straight to the 1000. Now from 1000 made a high somewhere around starting of this 2025. After that, stock price into the consolidation phase, it has a strong support of 660. It broken down last week only, and after that, the panic low created somewhere around 470. Now from 470 to 560 in 3 days only. So I don't feel to catch up this rally. Let wait for more time. Stock definitely will go in consolidation after such big corrections. So if anyone is holding this particular stock, they can keep hold with the strict stop loss below 500 for sure, and you can wait for some recovery. If price is crossing 660, then this bull run or this pullback can convert into the long term rally also. But as of now, you can hold this particular stock with the strict stop loss below 500. For fresh buying, I would say wait for 2 or 3 days.
Okay, fair point. Let me just also highlight for all our viewers what else is buzzing. Infosys is now the top mover on the Nifty, 1.6% higher. You have Bharti Airtel that's again ticking higher, 1.5% up in trade. Eternal is moving up, NTPC, HDFC Life. These are some of the other names that are buzzing in trade. From the telecom basket, Bharti Airtel, do you think any fresh opportunities to buy into the current price also exist at this point in time, Kiran?
So if you look at the Bharati Airtel price chart, the stock price into the very good bull run, the setup is strong, definitely. It has created a very good support at 1800. The prices is not breaking down below 1800. Then for the long term bet, definitely you can keep buying or accumulating on any dip. As of now, if you look at the price chart, price has given a fresh breakout above 1900. So for intraday or maybe short term trader, you can keep a stop loss of 1900 for the target above 2100. And for the positional buyer, you keep a stop loss of 100 days moving average, which is somewhere around 1870, 1880 only. So overall chart pattern is very strong. If you are okay to give 1 quarter or a 6 month kind of a time horizon, then only you can go long on Bharti Airtel.
Okay, got that. Let me also bring up consumer durables. That's another space that we must focus on. It's been a big laggard of a space of late. Throughout the course of this year, this actually has not really performed at all. Even in the previous festive season, there was not much enthusiasm that we actually saw of this index. What's actually keeping the stocks buoyant right now are the hopes that GST rate cuts could actually bring down the prices of a lot of white goods consumer durables and thereby increase the demand for them and an opportunity for companies to increase their sales as well. Your thought? Are you looking at this afresh?
See, Nifty consumer, if you look at the overall chart pattern, it has been muted since a very long term time for sure. Overall chart pattern, if you look at the prices as 30, I mean the index price is somewhere around 38,000. Stock price is crossing is 200 days moving average, and there are chances we can see some uptick towards 40,000 or maybe 41,000. Now, if you look at the stock price of Nifty consumer durable, or even you can check the Nifty FMCG also, there is not a big chunk of stock price has been moving as of now. But yes, definitely if you look at overall chart pattern or overall the indices or even the stock pattern, definitely one can go long on this particular stock. The stocks like consumption, Hindustan Unilever, it's giving a fresh breakout. If you look at the stock price, like somewhere around Imami, it is also doing very good. So Imami is our favorite pick. If you look at the chart pattern of Imami, the stock price is giving a breakout from the long consolidation pattern. Stock price made a high of 880, 900. From that, it has cracked down to 500. Now from 500 to 600, stock price is making a double bottom pattern. And the breakout level is little bit far. 660, 640 is the breakout level. But now the stock price is above its all important moving average. Recently only it has crossed over its 200 days moving average also. So one can go long on Imami current market price with the strict stop loss below 570. As of now, the 450, 460 would be the target. And once the price is crosses that, we can expect some a good amount of rally on Imami. So Nifty FMCG, Nifty consumer durable, definitely one can go long.
Okay, fair point. I hope this has given some clarity to all our viewers then. Let me also just highlight some of the other stocks that we can just mark out for all our viewers then. Anything within the Nifty 500 basket that needs attention. You have very few and far between names that are actually higher. We marked out HLE class quote from the last couple of sessions. This is higher. Ola Electric we marked out. That's already been buzzing since last 2 days. Kitex Garments from the textile space is in fact buzzing today, about 5% higher in trade. So those are some stocks that are buzzing in the Nifty 500 basket. But autos are also now slightly ticking higher. Real estate, that's also coming into the winning zone. FMCG, consumer durables, already marked out by Kiran. Let's also focus on Eternal. I think that's the one that's also picking up pace, 1% higher. From the QSR space, new age tech space, are you still looking at Eternal for fresh bets, or do you think some other names are also coming on your screens?
No, definitely eternal, you can go long at current market price for sure. The reason being, if you look at the chart pattern, stock price made a high of 300. After that, it cut down to 200. And from 200 is again, it consolidated for a while and then slowly and gradually it's back into the height of high bottom pattern. It's the classical Dow theory. And now it is crossing its previous all-time high. Again, after crossing the all-time high, he retested and now started the fresh rally. It's again a classical textbook pattern of cup and handle pattern. Considering the pattern, you can go long at current market price or any dips toward 300. Keep a strict stop loss of 290. And if you're okay to give 6 months to 1 year, definitely Eternal should be in your portfolio. We can expect some good amount of rally on Eternal for sure.
Okay, got that. Let me just also look at once again all those stocks within the online gaming basket that we can track. So we do know, in case there is the online gaming bill that was passed by the cabinet yesterday gets tabled today, we'll have to see what is the actual legislation. Sources are also telling Business Today television, based on what the draft legislation has, is that the government is seeking to ban all the online gaming platforms that are linked to potential kind of money related kind of moves, all those companies that are into that. And, that's getting a reaction on some of the stocks like Nazara Tech, for instance, 5.5% lower today at 1322. There's also On Mobile Global. That's another stock that is actually reacting on the negative side, 3.4% higher from the same basket. Although Delta Corp, which is in offline gaming right now, we'll have to see what is the impact on that one right now. But for now, the stock is improved from the day's low. It's down by just about 1%. But at this point in time, these are the three stocks that are seeing a clear reaction. Kiran, how are you advising investors on these stocks which were betting big on futuristic, spaces or sectors that could emerge as big going forward? This bill, if it clamps down on the online money making games and those companies, that could potentially wipe out a part of the industry as well.
If we discuss about this as a holistically gaming, definitely in India we consider gambling or gaming, anything money making out of gaming, online gaming and everything. It's been a little bit unethical or something what we believe. But if you look at the globally, definitely these players are making a very good amount of money because they are just creating the platform with all awareness. Now let's not get into that debate whether this business is good or bad. If we considering the Nazara Technology and Delta Corp, these two stocks look very much promising. If you look at the Nazara Technology chart pattern, the stock price has given the first breakout somewhere around 800 rupees. After that, it has created a resistance over 1000 rupees, and after 1000 rupees breakout, it retested it previous all-time high somewhere around 1400. Now, after this news, definitely the knee jerk or reaction should come, and we have to see 1200 rupees level. If stock price is not sustaining above 1200 rupees level, then investors should worry. So anyone is holding Nazara Technology, keep hold with the strict stop loss of 1200. If anyone wants to buy, just wait and watch. Let's clear this news, and you can accumulate towards 1200 for sure. So 1200 would be the stop loss for the Nazara. Coming to the Delta Corp, apart from this gaming news, there is a big headwinds of the GST. That case is already been there. Now, the Delta Corp has two things. Gaming is also there, but they have a hotel industry also there. So there is a contra play should be done with the Delta Corp at current market price. You can go long because if anything happens wrong with the online gaming and government is not doing anything with the physical gaming, then Delta Corp should be it can be the positive news for the Delta Corp. So you can go long on Delta Corp at current market price, keep a strict stop loss below 80, and you can expect some sort of rally. If prices is holding 90 rupees or 95 rupees level, then it can move till 130 for sure.
Okay, fair point. I hope this has also given a lot of clarity to our viewers there. Let me just bring up Bharti Airtel from the telecom space as in focus, 1.5% higher, 1940 right now. Remember, the stock is also in focus because, and it's the top mover right now at this point in time. That's also because, these companies, telecom companies, yesterday it was Jio, Bharti Airtel, now they're discontinuing their lowest tariff plans, and that is indicative of the company's clear focus going to be on the premium plans, on improving their margins going forward from here, and that's something that is pulling these stocks also higher in trade. Let me look at the broader markets now. Both the small caps and mid caps that had started on the positive zone have actually now slipped into the trade. You can only see FMCG, consumer durables, IT, infra, realty as the sectors that are buzzing, but autos have also slightly pulled back. You can see now even the small caps and the mid caps that are slightly trading lower in trade, but many stocks within the basket are still higher. What's higher? Godfrey Phillips is up 5.8% higher. Reliance Power is up by 5%. You have PG Electroplast we marked out. Dr. Lal Path Labs, Chambal Fertilizers is higher in trade. You can see Amra Raja for batteries at this point in time. You can also see Go Digit General Insurance. In fact, insurance is one space that we can actually focus on again. Kiran, are you looking at keenly any of these insurance names? We are also given to understand that with the potential GST cuts, even health insurance players are likely to benefit with lower premiums, and thereby that could increase the possibility of demand for such insurance policies as well. How are you looking at some of these names?
So in insurance, SBI Life Insurance Company is on our radar. Our company has a coverage also. We recently gave a buy rating on SBI Life at current market price because the technically stock price is giving a breakout from long consolidation. We have seen a smart recovery from 1500 levels to 1800 level. Now 1800 and 1900 was the resistance. Stock price spent almost 2 to 3 months within this range only, and now prices is trading above the 1800 also. So one can go long on SBI Life at current market price. No doubt today is trading at days low, but we are looking a very good chart pattern and also a good fundamentals of SBI Life at current market price. You can go long with the strict stop loss below 1800 and we can expect price target of 2000 for sure. So SBI Life is on our radar. One more stock, GIC looks very much promising on PSU insurance company. So overall chart pattern, earlier it has given a breakout. It went up to 500 rupees and again it is back to its previous breakout level. No doubt stock price is trading below its all important moving averages. But on daily price chart, it has created a triple bottom pattern breakout. The risk reward ratio look very much favorable. You keep a strict stop loss of 370 and go long on general insurance. You can expect price target of 450, 460 in upcoming time. So GIC and SBI Life Insurance on our radar.
Okay, fair point. Let me just also dig a little deeper to find out what else is buzzing. Let me also point out to you from the PSU space, what are you looking at, Kiran? That space has also been left out of our conversations of late. PSU space, any action within any pocket that you find?
So in PSU pack, SBI we already discussed. Apart from
Yeah.
that, after the PSU comes, generally people think that PSU is only about the defense because last 2 year we have seen a strong bull run on PSU within the defense only. So as of now, if you look at the BEML on PSU side, it is look promising at current market price. So you can go long on BEML at current market price, keep a strict stop loss below 4000 and you can expect price target of 45 4600 for sure. So BEML looks very good. You can also keep an eyes on HAL, the everyone's favorite. If you look at the overall chart pattern, stock price is taking support at 200 days moving average and a very good base is creating. So you go long on HL also at current market price, keep a strict stop loss below 4400 and if 4400 is not broken down, then you can expect a price target of 48 4900 for sure.
Okay, got that. I hope this has also given some sense to all our viewers. IT, in fact, is picking up more pace as I can see now, 0.6% higher in trade. That's where the action is. So when the markets was getting tough, it's IT sector that's really stepped up into trade. You do see a lot of stocks that are buzzing here now. Of course, Infosys is the top mover on the Nifty. You also have names like TCS, Persistent, Oracle, Wipro and Emphasis also showing us some tad bit slight gains, but largely it's been supported by Infosys as well. When we talk about the large cap space, Kiran, Reliance Industries is something that also came into focus yesterday. Strong moves have been seen in the couple of last few sessions as well. What's your fresh take on Reliance? 1419 at the day's high point. It's improving from the day's low yet again. We have discussed this in the past as well. I wanted to now talk to you about a few key points or triggers, as if we may call them, that are bringing back our attention to Reliance Industries. One is SEBI's changing of some IPO norms that could actually potentially ease the listing for Reliance Jio, or benefit it to some extent, is what we are given to understand. We were just talking about the telecom space, how the focus of telecoms company Reliance Jio will also be on large profitability. The consumer durables arm, the consumption arm of Reliance Industries is now focusing on expanding its presence to healthier beverages. That's another one key trigger. Everybody is looking forward to the annual AGM. That's another key trigger there. S&P has given a case for an upgradation of Reliance Industries as well. So a lot of factors that are moving in positive for RIL, and as we speak, the stock is into green now at 1420 at the day's high, 0.02% higher. What's your sense?
So if we discuss about the Reliance, last Wednesday only we discussed about the Reliance when stock price was trading somewhere around 1370, 1380, and we have given a buy call. Even though stock price was trading below 100 days moving average, with that prices has a very good support at 1350. Apart from that, the stock price has a one more support of 200 days moving average somewhere around 1320. So any dip on Reliance would be the great buy. Let stock to cross 1400 and you can see some sparking rally on Reliance, and we are seeing since last day only. Now today also stock price is trading its day's high. Yesterday high somewhere around 1421, 1422. So once the stock price crossing that high, you can expect some good amount of rally also. So at current market price, if you want to go long, you can still go long. Keep a strict stop loss below 1380 and you can expect some good amount of rally on Reliance also. So it's a long term buy, it's not for the day or two, but if you want to keep hold for the 2 to 3 months, definitely Reliance will help market and investor to make a good return.
Okay, fair point. All right, Kiran, we'll then leave it at that. Thank you so much for being with us in the morning edition of Market Today. Always good to speak to you and seek such wonderful stock ideas for all our viewers as well. Meanwhile, the markets are actually also turning flat, and looks like we are going to be turning positive on the Nifty as well. 24,980 at this point in time. So we are back from the lowest opening that we have, lowest point of the day, and of course we are now inching higher in trade. Let me just also highlight for you, it's IT clearly, it's FMCG consumer durables, it's also PSU banks and oil and gas that are picking up pace. Some gains also coming back onto the broader market. So the markets seem to be digesting the weakness in the global markets and the cues that we got on a negative tone in the first half an hour of trade, and yet again the attempt to turn green on the back of strong stocks like Infosys, Bharti Airtel, NTPC, Eternal, and even Nestle pulling up in trade. What is also pulling up in the FNO space is PG Electroplast, now up 7% nearly. SJVN, Blue Star, HAL from the defense pack, that's also on the buzzing zone right now. Within the next 15 names, you see Indian Hotels also pulling up in trade, Godrej Consumer, Avenue Supermart from the retail space, Dabur from FMCG, Swiggy is also higher in trade, Varun Beverages, QSR, food delivery, a lot of these consumption-oriented names, those are the ones that are in focus clearly. You also see some fertilizer names that are continuing to tick higher, like Chambal Fertilizers and Chemicals, carrying on with the move yesterday. Auto ancillaries clearly in focus because of two-pronged positive news flow. One is on the GST rate cut that's anticipated, and the other one is relief from rare earth metals as far as the China export ban is also concerned. So the market breadth is clearly improving for the better. Let's see how this really pans out in trade. It's 9:50. First 35 minutes have turned out, to be now turning in positive for the markets. 24,982, up 1 point higher in trade. So let's actually look at how this pans out. We'll continue to get you fascinating conversations across the board on markets, on new IPOs, and of course everything that you need to track in between. At 12 noon, I'll be back with daily calls to answer all your stock related queries. So stay tuned for that.